Okay, good morning, everyone, and welcome. People are still streaming in, 76, 78. We are happy to be here with you. The topic today, the webinar you're at, so you know where you're at, is CoC Housing Requirements, Session 2. I am Shannon Quinn Sheeran with Housing Innovations, and I'm joined by my colleague Lauren Peretti, who's waving, also with Housing Innovations. We are part of the CT-BOSS team, the Connecticut Balance of State team at Housing Innovations, and as part of that team, we do much of the backbone work for the Connecticut Balance of State Continuum of Care. So we are happy to be with all of you today and to see your lovely faces. Today's session, again, is session 2 on housing requirements. The first session took place on March 18th, and the recording of that is posted to the trainings page on the CT-BOSS website. And next slide. Before we get started, a few housekeeping items. Please, if you feel comfortable, we love to see your faces, so please turn your cameras on as much as you can, or you feel comfortable, and put your name in your little Zoom box in the way that you would like to be addressed as your screen name. So the way you do that is you click the 3 little dots in the corner of your icon of your video and just click rename and put that in there as you'd like to be called. We're going to upload the slides to the chat box. Oh, Lauren already did that. So that's the slides for today. We love interaction, so please feel free to raise your hand, use emojis, type comments in the chat box, or just unmute and talk. Part of this, the goal for this session, of course, is presenting the information related to housing requirements, but the beauty of it is that we're live and in person, and you can all ask questions on things that might be confusing or something you've never understood about some of those requirements. So please feel free to interact with us. And we will try to get to all of your questions today. We'll get to as many as we can. If we don't get to your question, reach out to us at any time. Our contact information is on the last slide of the deck, so you'll have that in the chat and you'll have it at the end of our presentation. We will try to be mindful. You know, Lauren and I have been doing this, and some of you have really for a very long time. So some of the acronyms just roll off our tongues as second nature, but we'll try to be mindful that some of you are new to this and don't know those acronyms, so we'll try to clarify. But if we're saying something you don't understand, please feel free to ask a question, raise your hand. This session is being recorded and will be posted to the trainings page on the CT-BOSS website, probably most likely, unless there's some kind of issue, within the next 24 hours. And today's session is expected to be 2 hours long. Next slide. Again, we love interaction, and we've noticed that in some of our webinars, some of your computers don't have microphones, or you may have trouble with audio. So if you'd like to say something, you can join by phone. So the phone number is here, and if you're joining by phone, you're going to need the meeting ID and the passcode. Lauren, if you're able to get that in the chat, that would be great. Thank you. Next slide. Again, good morning, and take a breath. It's good to see you all here. Many of you we know, and some of you we haven't had the opportunity to get to know yet, so it's helpful for us to see who is here. If you could pop in the chat your name, your agency, your title, and if you could tell us how long you've been involved in CoC programs, that'll give us an idea of who we're talking to and how to move forward with what knowledge base you may or may not have. So I'm going to look at some of those. 1.5 years street outreach program, 16 years. We're going to try, and if you have questions, with some of these slides have to do with PSH programs or rapid rehousing programs, so we're going to try to say that for each slide, which applies to what type of programs. 6 years, 1 year, 5 years. Just started in housing. Welcome. 19 years, Elaine. All right, I'm going to keep on going so people can see who's here, and we're going to go to the next slide. But welcome to everybody, if you just started or if you've been here for 20 or more years. So our agenda here, you see the agenda of the items that we covered in session 1. Today, we're going to cover income determination and rent calculation, redetermination of income and eligibility, project exit requirements, and then at the end, we're going to cover DMHAS-specific requirements. So if those DMHAS-specific requirements don't apply to you, you can feel free to hop off after the project exit requirements. Next slide. Income verification and subsidy calculation. Here we go. So this does not, these income verification subsidy slides are not relevant for street outreach, youth navigators, YHDP crisis, or YHDP diversion rapid exit programs, because income verification is not necessary for those programs. All right, and again, we're going over the highlights here. There is much more information in the operations guides for PSH and rapid rehousing, and at some point later in the presentation, I'm going to pop those in the chat, but those are both posted to the CT-BOSS website as well. Next slide. Income, the overview of income review and documentation. So programs must examine, which means review and document, all income at admission and annually at minimum for PSH and transitional housing programs, at admission and every 90 days for rapid rehousing programs. This income determination must look at all household members, and we'll say more about what that means about all household members in slides coming up. People's subsidy must be adjusted when there are changes in income reported by the participant. Again, we'll have more information about how that's done and when that's done moving forward on these slides. And participants must provide income information as part of their participation in these programs. So while some things, many things are optional in these programs, for instance, services, participating in services for people in PSH programs is optional. It's not a requirement. Provision of income information is a requirement for these programs. So people must provide that to you as a condition of being part of the program. Next slide. Income determination and rent calculation. So this applies to PSH programs. We'll talk about rapid rehousing coming up. Again, it's required at least annually, and please use the approved worksheet. HUD does look at income calculation worksheets when they do come out to monitor programs, and it's a great way to just ensure that all the deductions that are allowable are taken and applied to the person's rent calculation. The calculations are done automatically in those worksheets, so it's a way to avoid errors. So please use the approved worksheets. They're going to be linked in an upcoming slide, and they're a great way to just do those calculations accurately, make sure you're getting all the information correct. When income increases for PSH and rapid rehousing participants, projects are required to do a rent recalculation. When income increases, PSH projects are also required to recalculate rent. So when a PSH participant's rent will increase, for instance, when their income is increased and the rent is going to go up, projects must give participants a 30-day notice of the increase, and the increase will then take place on the first day of the month after the 30-day notice. This way you're giving people some advance notice, and they can have their budgets in mind and adjust as necessary to have enough rent when it does increase. When a participant's rent portion decreases, projects are going to make that adjustment as quickly as possible and then apply that to the next month's rent. Next slide. So these are the aforementioned rent calculation tools. In the last year or so, DMHAS started using these workbooks that are linked here. So they work in a way that the reference guide is linked here, but they work in a way where you enter the information once or twice and then they're transferred to other documents like the HAP agreement or the leases or other documents that are necessary. So hopefully they make it easier for you all to do all the documentation that's necessary for DMHAS projects. So the rent assistance workbook for tenant-based rent assistance is the top one. Then for project and sponsor-based rental assistance is the second one. The fourth link there is a PSH rent calculation tool for non-DMHAS projects. Then there's the rapid rehousing rent calculation tool and the YHTP rent calculation tool. So those have different worksheets in order to do the different types of projects. Next slide, please. What is considered income? This slide applies to all component types. So employment, wages, salary, overtime, bonuses for people over 18 are counted as income. If you're a full-time student who is over 18, your income over $480, or if there's one in your household, their income over $480 is excluded. You only count the first $480 if you have a full-time student in the household. Social Security, pensions, disability are income. Unemployment, workers' comp, or severance pay is considered income. Welfare assistance, such as Saga Cash, temporary assistance for needy families, those are considered income. Alimony and child support. A note about child support, in many instances, there will be an agreement that a household is supposed to receive child support, but they are not receiving it. So there's something in writing saying that this is due to the person, but it's not being followed through on. So if that's the case in your household, then you would just document that the person is not receiving it in order to not count that as income. Like one of the big keys for everything here is documentation. Keep everything on file as much as possible. Regular gifts. So if a person, so if you, for instance, your household is receiving monthly checks from a parent, a grandparent, an uncle, where they're just going to help you out, help the household out, and they're giving you $200 a month. That is regular gifts. Regular is like that. It's every month. If it's just a birthday present or a holiday present that somebody receives once a year, that's not regular. But if it's monthly and they're giving you that money every month, then it is considered income. And then, of course, net income from a business or a profession is also considered income. So let me see. So the net income, something with that is that it's the person's income after the reasonable expenses for conducting that business are deducted. So that would include deductions such as the Social Security taxes, Medicare, regular income taxes that would usually be taken out of somebody's regular employment check, but because it's your own business, they're not being taken out. That's how you calculate net income for a business. I think that is it for that slide. Any questions?
There's a question in the chat, Shannon. So it's from Yolanda at CCADV, and her question is, what if you're the head of household and a full-time student with income?
That's a good question.
You want to take it?
No, I don't. I would assume that it would apply to that. The first 480 is counted, but I would have to look that up to be sure.
I think that's right. That the first four, there's no specific rule that is different for a full-time student is as the head of household compared to a full-time student that is not the head of household. So I think that's right.
So you count the first $480 and then the rest of their income is not counted for that person. Any other questions that I, no? All right, next slide. This slide also applies to all component types, verification of zero income. So uh, as I said, you want to get income verification for everyone in the household. For any adults in the household who do not have income, you want to get the verification of zero income on file at those appropriate times for whenever you're doing income verification or reevaluation for your household. So at each initial certification and recertification, you get that zero income affidavit. And the one for permanent housing, no income certification is linked here. And then there's a separate one, different one for rapid rehousing, zero income affidavit. I would use either one, honestly, for a transitional housing program. Yeah, next slide. Again, documentation, right, is important. So this applies to all component types. You must provide income documentation, again, as I said before, as a condition of participation. It's not optional. You as the staff who is helping the case manager or housing locator staff or who's helping the person get that income documentation can provide help as necessary, including reasonable accommodations. So you can go with a person to their employer, you can call our employer, you can contact the Social Security office with a client or the Department of Social Services to get income verification. But it is a requirement. Documents must be obtained for all participants, regardless of disability or other barriers. And the amounts documented for a person's income have to match what's on the rent calculation tool. So that's another thing that we look at during monitoring. We look at what documents exist to verify a person's income, and then that income matches what's on the rent calculation tool. And all that documentation must be retained in participant files. Next slide. What is excluded from a person's income? This slide applies to all component types. So employment income for children under 18, there's an asterisk here. A benefit income is counted, but employment income is not counted. If you have a child under 18, you have a 16 or 17-year-old who has a job, that income's not counted. And then again, I'm repeating, earned income of a full-time student is only counted for the first, a full-time student who's 18 years or older. We only count the first $480.
I'm going to retract the answer that we gave earlier to Yolanda's question, because I'm seeing here, and I'm sure we pulled this straight out of the HUD guidance, that exclusion of earned income for a full-time student who's over 18 seems to apply only to a dependent. So Yolanda, I'm going to, after the webinar today, look that up and get back to you.
Thank you. Thanks, Lauren. Okay, temporary or non-recurring sporadic income gifts is excluded from income. So Lisa, a holiday gift where a grandparent gives a person $100, birthday gifts, those are excluded from income. Lisa, you have your hand up.
Yeah, sorry about that. So
No.
just one other thing for the DMHAS programs, when we were talking about the recording the no income, if you get a letter from an employer stating that the employee no longer works there, I also ask that folks have them sign the no income verification form, because that will encompass anything outside of that employment, right? So it's stating that they're not getting any unemployment at that point or anything. Thank you.
Thank you, Lisa. Okay, other things that are excluded from income. Payments that households receive for the care of foster children. So that could be there are instances where households have several foster children and they get checks to take care of them. That is not counted as income. Lump sum additions to assets. So if somebody receives an inheritance, if somebody receives an insurance payment, or if somebody wins the lottery, those lump sum payments are excluded from income. Medical expense reimbursement is also not included. The income of a live-in aid is excluded from the household's income. So live-in aid is somebody who is not a member of the household, who is only there to provide services to the member of the household. So in other words, if not for the need of the client, this person, this live-in aid would not be there. It has to be somebody who otherwise would not, other than this need for an aid, they would not be living in the house. Student financial aid is also not considered income. Can it be a relative? They're talking about the live-in aid. So this was a question in our last one too. So it cannot be a spouse, right? Because that person is going to live in the household. But it could be a niece or a nephew. It has to fit that definition, right? They're only living there because the need of this individual in the house in the household to be a live-in aid.
The live-in aid can't be responsible for the person financially. So to Shannon's point, like it can't be a spouse, right? Because spouses are, responsible for each other financially. It can't be a parent of a child because that child is a dependent. But if it's like Shannon said, a niece, a nephew, someone who otherwise, if it's somebody who's been living with the household already for 20 years, then no, they're not going to qualify as a live-in aid because they've already been living with the household. It's going to be hard to make the argument that they wouldn't otherwise be living there if they've already been living there.
So, and there's another question, what documentation is needed? I would document the requirement of a live-in aid, like a note from the doctor saying that the person requires this ongoing care.
It looks like this question is from Marie
Yeah,
about the live-in aids. So, Marie, if you want to pop your email into the chat box to make sure we have it, we can get back to you with more specifics on the requirements for documenting a live-in aid. There are a couple of other questions in the chat, some of which I think you can't see because they came directly from me, Shannon. So one is, would Social Security benefit for a child under 18 be included as income?
yes, that is benefits for children under 18 are considered income. Yes. There's another question that was, is it any amount of lottery winning? So the key for that is it's lump sum, right? If it's a lump sum, then yes, it's any amount. But if it's a lottery winning where they're getting monthly checks, and so that's considered regular, that would be included as income. And if that's the case, if they're receiving that kind of money, they may not need the program anymore. So they might move on to other pastures here. But okay, what else? To show that they're a caretaker, and Marie, Lauren's gonna get back to you on that. What if a client gets a settlement? How would you calculate? So again, if it's the one-time settlement, you don't count that. You exclude that from the income. If it's any kind of regular ongoing payment, then you consider that income. If a
Wait,
person,
what was it? I'm sorry, Shannon, I was looking at the chat and I didn't hear your answer to that question about the $80,000 settlement. Can you say that again?
if it's a one-time payment settlement, $80,000, then that's excluded from the person's income.
Yeah,
If
it would be,
if it were an ongoing monthly type of thing, then you would count
it,
it.
you would impute the income from assets, which Shannon
That's an
is gonna cover in
upcoming
a minute.
slide.
Yeah, it's
Yeah,
going to
yeah.
cover in a minute. So, and then there's another question, which I think we're going to have to get back to you on unless Shannon knows this, because I do not know this off the top of my head. If a person has a trust, is this included in income?
No, we're gonna have to look that
So
up.
Zeta, same thing. Pop your email into the chat and we will get back to you with the answer to that question. I think yes, but I'm not positive. These rules are super complex, guys, so we always want to make sure we get you the right answer and not just what we think.
And then Rob put something in about the $400 for a full time, $480 thing for a full-time student. So we thank you, Rob, and we will look more into that, but I think we have to, since we have conflicting information, we're gonna have to look it up and get back, right?
Yeah.
Yeah. Oh, Rob, with a lump sum or trust, it is regarding the federal interest rate. Are you talking about that passbook rate? Do you think that we're going to talk about assets with?
Yeah, I think that's what
Yeah.
that means.
Okay.
So, which we're
Okay.
going to cover in a minute.
Okay. All right. Next slide. Deductions from income calculations. These deductions are not applied, as it says on the slide, to rapid rehousing. So there is a one-time elderly disabled household $400 per household per year deduction. So even if there are two disabled or two elderly or more in a household, this is only a one-time $400 per year deduction. Dependents, that is $480 per dependent per year. So if you have two children, that's 2 times 480 and so on. And then for elderly and disabled households only, non-reimbursed medical expenses and disability assistance that is in excess of 3% of your gross income are allowable deductions. So a few words about that. Medical expenses can be money that the household is paying for insurance, insurance payments, and co-payments, over-the-counter medications or medical items that are prescribed by a doctor, eyeglasses, that kind of thing. Any medical payments that are out of pocket that exceeds 3% of your gross income, any amount above the 3% is the deduction. And then the disabling assistance part of that. So for instance, the cost, if the cost of caring for a disabled household member that allows another household member to work, that is considered disability assistance. So that cost of caring for the disabled household member could be a deduction. Or, for instance, if I'm disabled and I need a wheelchair equipped van to assist me to be able to work, that could be considered a disability assistance that could be deducted. Again, in excess of 3% of your gross income.
So
Then go ahead.
there's a question in the chat about, does the deduction apply for both out-of-pocket costs for Medicaid and Medicare?
Yes.
It does, but most people are going to have a hard time meeting the 3% of gross income standard, right? Like, so standard, a lot of times they're probably not going to meet that standard, but if they do meet that standard, that it's in excess of the 3% of gross income, then yeah, all non-reimbursed medical expenses would apply.
Okay, and the last bullet here, the reasonable cost of childcare to promote work or education can be deducted. So a note about that, deduction for childcare cannot be more than the person receives in income if they're going to work. And the word reasonable is important here, right? If you're paying 4 times the average rate around in your area for childcare, that's not considered reasonable. So it has to be reasonable. And I think that's it for that slide. Next slide. Assets. This is where we were talking about lump sum and all that good stuff. So if somebody has assets of up to $5,000, these aren't added to the rent income, the income calculation spreadsheet. They don't impact the tenant's rent. But if a person has assets greater than $5,000, then this passbook savings rate, which changes every year, you have to look it up annually, And if it's something you don't come upon regularly, because in monitoring, I don't see many people having assets, then you just might look it up every time you come upon this situation where a person has greater than $5,000 in assets. So you take the assets. So for instance, the person gets the lump sum windfall, right? And you see that at the time that you're reevaluating their income, they have $50,000 in the bank, right? You take that $50,000, you put this multiplier on it, which is the rate of 0.45% at this point in time. So you multiply 50,000 times 0.0045, and the deduction would be, or the income generated, I'm sorry, would be $225 for that year. Lauren, did you have some question on that, or?
No, I was reading Katie's response to a previous
Okay.
question.
So
When you're done,
just
I'll share that with everyone.
okay. I'm just another note. Assets can be other than cash, so they can include property, for instance, and then the deduction. So before you would do that calculation, you would deduct the amount incurred in order to transfer that property to cash. So some of this I feel like you kind of have to be a tax lawyer about, but like you again, look back at these slides as you need to, or back at this webinar as you need to, and as these situations arise.
The other thing I would say is that this stuff happens very, very infrequently
Yeah.
in our population. So if you encounter something that you've not encountered before and you're not sure how to handle it, call us, and we're not going to know either probably, but we will look it up to make sure that we give you the correct information, because this happens so infrequently in our world. So let me know when you're done with assets, and I'll share Katie's. Are you done with assets?
Yep. Mm-hmm.
So Katie looked it up, the question that went in the chat. So thank you to Katie Duran from the Department of Housing. She looked up the question about whether a head of household who's a full-time student is qualified for the income deduction, and the full-time student deduction only applies to full-time students who are dependent, and Katie has put the actual citation to the regulation in there. So thank you, Katie.
Yeah, thank you, Katie. Okay, next slide. Do I use gross or net income? So again, gross is your total income before any deductions are taken out whatsoever. Net income is what people take home, their take-home pay after all deductions. Use net income for business income. Net income after all deductions are taken out. Use gross employment income in PSH, in transitional housing, and then for YHDP rapid rehousing to calculate that 65% cap on the tenant's contribution. And use net income for rapid rehousing that is not YHDP. Any questions before we go to the next slide?
I am not seeing any in the chat.
All right, we have a poll coming up on our next slide.
There's a tip someone shared. Just a quick tip. Sometimes net income is shown after someone gets advance pay from their paychecks. Yeah, that's a good, so you just have to be really careful that you're pulling the correct number off of whatever documentation you're using. So depending upon whether you're a PSH or a rapid rehousing program.
Thank you. Right. Thanks, Randy.
Here's the...
Okay. Oh, there's, Lauren's going to put up the poll, I think, right?
Yep. So this is poll 1, right?
Mm-hmm.
Launch.
Okay. So there are 3 questions here, and they're true or false. So number 1, providing documentation of income is optional for participants in a Housing First project. That's true or false for that. Joe is 22 years old. He babysits his niece once a week and gets paid cash. This income is countable when calculating rent. True or false? And then third, Ron and Jeremy are both disabled and consider each other family. They live in PSH and each receives the disability deduction, or $800 per year total, when calculating their total household rent. Is that true or false? So I'll give people a few seconds to complete those 3 questions. We're getting
Questions?
all right. Lauren, you want to end that and then we'll share the results. Okay, so the first question, providing documentation of income is optional in Housing First. No, Housing First has doesn't impact whether income is optional or not. Income documentation is required for all projects. So number 1 is false, and 96% of you got that. Joe babysits for his niece once a week, gets paid cash. This income is countable. True or false? So that is true. Because that income is regular and weekly, then it is counted as the person's income. Third, and 80% of you got that right. Ron and Jeremy are both disabled and considered each other's family. So they live in PSH and they get the $800 a year total deduction when calculating their household rent. That is false, because that disability deduction is, you can only do it for one time. Even if you have 3 people who are disabled in the household, it's once per household per year, one $400 deduction household per year.
I just want to say a quick word about the Joe example here. So sometimes when we monitor, people will ask, well, if it's cash, right, he's getting paid in cash, how am I supposed to document that? So, and the answer to that is that it sort of follows the same rules as like homelessness verification, right? So you always should try to get third party. So in this case, you know, for example, a letter from his niece's, you know, parents that say that he's providing this and they're paying him X amount. You know, it's going to be hard to do that. So if you can't get third-party verification of the income, you know, document that you attempted to get that and then have Joe self-certify the income and put that self-certification in the record. There's a question. It looks like Elaine has her hand up. Hi, Elaine.
Hi, good morning, everybody.
Morning.
So it's not really a question, but along those lines, we've taken the zero income calculation form and made another form that is sort of an income verification form with wording that's a little bit different that we ask people to sign if they are getting paid cash.
Great.
That's a great
That's
idea.
great.
Yeah.
Elaine, would you mind sharing that with us?
Sure.
Yeah, send it to us and we'll get it up on the CT Boss website so that other people don't have to reinvent the wheel that you've already built, Elaine.
Well, I didn't build it, Bobby Joe did.
Or Bobby Joe.
Bobby
Yeah,
Joe's
she-
awesome.
We always like to share those resources. So thanks, guys.
Okay. Do you want it in the chat or do you want it in
Just
an
email it to me, Elaine.
Okay.
Yeah,
Okay.
thanks.
All right, I think I'm passing it over to you, Lauren.
Oh, yes, you are. Look at that. Hi, everybody. So we're going to shift gears a little bit and we are going to talk about utility allowances and utility reimbursements. So obviously, all of your programs are working with people who are very low income. And I know that you are out there, your teams are out there every day pounding the pavement to try to find as many units that include the utilities in the rent as possible. particularly if you're working with folks who have zero income or very minimal income like Saga Cash. So we also know that in this very difficult housing market, that is not always possible. And a lot of times you are renting units where tenants are responsible for paying some or all of their own utilities. And when that is the case, that amount that they're responsible for paying has to be considered when calculating the tenant share of rent. So all of the rent calculation tools that Shannon just covered, which are linked again on slide 9, right, are going to prompt you to enter a utility allowance for each type of utility the tenant is responsible for paying. So, for example, if the lease says that the person is responsible for paying for the gas for heating, right, then you're going to apply that utility allowance for gas for heating when you do the rent calculation tool. So this is a common finding when we monitor, right? So you want to make sure that what it says in the lease, right, all of the leases should specify whether the landlord or the tenant pays for each of the different kinds of utilities. And then that should match what the rent calculation tool says. So, sometimes we see utility allowances that should not have been applied, and vice versa. So you want to make sure that you look at the lease and the rent calculation tool and that those two documents match. So in order to figure out what the utility allowance is for each of these different kinds of utilities, most of your projects are going to check with your local public housing authority. If you're renting units in an area that has a public housing authority, which most of you probably are, because most of our units in the CoC are in Hartford and New Haven and kind of the cities that have public housing authorities. So you're going to go to the Public Housing Authority's website and you're going to be able to obtain the most current housing utility schedule from that website. Now, keep in mind that those are generally updated every year, and there's a date on them that says, what the date range that they apply to. So you want to make sure that you've got a tickler in your calendar to get the updated schedule when the one that you're currently uses is expiring. So for our rapid rehousing projects, you guys use DOH's, the State Department of Housing's utility schedule. I believe that is posted on our website. Is that a true statement, Shannon?
I don't know. I can look.
And anyway, if it's not posted on our website, it's definitely on the DOH website. And then if there is no PHA in your area, right, you're renting a unit in a small town where there is no PHA, then you can also use the State Department of Housing utility allowance schedule. So the other thing to keep in mind is that the utility allowance usually is not going to cover the full utility amount that the tenant has to pay, although sometimes it does, and sometimes it even exceeds what the actual utility bill is. But regardless of whether it's more or less than what the tenant actually pays, the amount that you put in the rent calculation tool is just the amount that it says on the schedule for the allowance, right? So if the tenant paid, let's say their electric bill in 1 month was $100, they, was hot and they were running their air conditioning nonstop, and the utility allowance is for other electric is only $50, right? Then they're only going to get credited for the $50 on the utility allowance, not the $100 that was their actual utility bill. So, and then what the rent calculation tools do is they subtract the applicable utility allowances from the amount that the tenant owes for rent, right? So if based upon their income, the calculation would have been that they owed $200, right? But they get $100 in utility allowances, then they're only going to have to pay $100 because that $100 gets subtracted from the $200. If the result that's shown in the rent calculation tool for what the tenant owes is a negative number, right? It says -50, right? Then you are required by HUD to reimburse the tenant for that amount. And that is not optional. That is a HUD requirement. So paying the reimbursement directly to the utility company is always preferable. Again, we are working with folks who have very low incomes, and if you send them a check for $50, they may need that money for some other important expense that they have in their life. Or, we're also working with a lot of folks that have substance use disorders, and they may spend that money on other things, right? So whenever possible, you want to get written permission from the participant to pay the utility company directly, and that also is a HUD requirement. So you have to get that written permission from the participant in order to make that utility payment to the utility company. And if the participant won't grant you that permission, then you're going to pay the reimbursement to the participant. Is there something that came in?
There are several questions. So Katie posted the DOH most up-to-date utility allowance. So thank you, Katie.
Okay, Katie.
And then there's two related. What about the water bill if it's under the landlord's name, but the tenant's still responsible to pay? And then the second is, does the utility bill have to be in the head of household name?
So it depends. If it says on the lease that the tenant is responsible for paying the utility amount, right, then the tenant should get a credit for the utility allowance. You don't have to show the bill, right? So the bill is not the documentation for the amount that you applied to the rent calculation. The documentation that you applied the rent calculation is the lease, right, that shows that the tenant's responsible, and then the utility allowance schedule, which in the case of rapid rehousing would be the DOH utility allowance schedule that Katie so kindly just put in the chat.
So another question, what if they're in rapid rehousing, they have zero income, the utility bill is higher than the calculated amount?
So again, if the person has zero income, right, and they are paying utilities, first of all, probably not a great scenario, because how are they going to pay their utilities if they have zero income? So that's a person that you want to definitely try to get a utilities included unit, and or quickly try to help the person to get some income always, right? We're always working with people to try and get as much income as quickly as we can. But that's going to be a person who's owed a utility reimbursement, right? Because they've got zero income and they've got a utility obligation. So you're going to, when you apply the utility allowance, the tool is going to produce a negative number, and then you're going to need to pay, hopefully, the utility company directly. But again, if the client won't give permission, pay the reimbursement to the client. Let me know if I've missed the question.
And Lauren, we do have mechanisms in place for ACT to pay the utility companies. And I just saw Randy's question pop into the chat as well. So ACT only requires a copy of the utility bill so that we know that we're paying the correct account.
Okay. And then the other part of Randy's question, the rent calculation sheet for rapid rehousing shows we pay 100% of the utility allowance in addition to 100% of rent for the initial first month. Can we pay it for month one if in month two their income is such that they have no utility allowance?
The rent calculation sheet for rapid housing. Sorry, I'm just trying to wrap my head around the question.
I know.
The rent calculation sheet for rapid rehousing shows that we pay 100%.
Can I clarify?
Please.
Sure.
Yes.
So yeah, I know I was trying to word that in a way that made sense. So we collect income verification for month one, right? And because of their income, they usually wouldn't get a utility allowance, right? So their income is such that they're not going to get a utility allowance because
Let me just
it's
stop you there, Randy, because their income doesn't determine whether or not they get a utility allowance. What determines whether or not they get a utility allowance is whether or not they are responsible according to the lease for paying the utilities, or the landlord is responsible for paying
no,
the.
right, no, right. So let's
You
say,
mean a reimbursement? Maybe you mean a reimbursement and not an
yeah,
allowance.
the reimbursement. I'm
Okay,
sorry.
got it,
Yeah,
got it, got
so
it. Yep.
let's say that they usually their income is such that they would not get a utility
Mhm.
allowance or a reimbursement. But in month one, the rent calculation sheet says that we can pay 100% of it. So I'm just trying to clarify that we can pay for month one, even though just like we pay full rent for month one, their income in month two would say that, they're not getting a reimbursement. Does that make better sense?
Yes, that does make sense. Yeah. So if they're in month one, the subsidy is supposed to pay for, and we'll look at this in a minute when we go through the schedule for rapid rehousing. But you're right. The policy is that in month one, they get the rent, 100% of the rent, plus any utility allowance that they're entitled to. So the subsidy would pay both of those things. You're right.
Okay, so
Doesn't matter
usually
what
you
month
have to
two is. Yeah.
usually you have to backdate that request because they don't get a bill until, later after. So backdating those requests is okay.
Again, the bill doesn't matter. I guess what I'm hearing DOH say is the act is requesting the bill just to make sure that you're getting the
You're paying the
just that
right.
they're paying the right utility company. But
Right. And maybe bill's not the right word. I mean, ACT needs verification of the account number. So that could be in the form of a bill. It could be in the form of a letter from the utility company to verify the account, etc.
Okay, got it. Thank you.
sure, and Lisa has her hand up.
Yeah, I just wanted to say that for the DMHAS CoC rental assistance programs, that we use the Department of Housing, the JDA rental assistance allowances, and that's something that I send out annually when I send out the changes for the FMR in October, just prior to October. So I just wanted to put
Okay,
that note out
thanks.
there so people know.
Good to know. Thank you.
That's the same as the one that Lisa or Katie just put in the chat, Lisa, the DOH.
That is not, because that was section 8.
Okay. All right.
Is there any chance we can start using that one, Lisa? Because it's the allowances are a lot different. DOH gives a better allowance than what JDA.
Yes. So what I've been told with that, Eric, is the allowances are higher, but what that also does is it squeezes the amount that we can afford to rent an apartment. Because once that increases, then it lowers your option for contract rent. I can, again, circle back around, with Alice and Steve. Or I don't know if, Lauren, if you have any thoughts on that, but that's the reason why we've been kind of using the exact same utility allowance since I can remember. And
Yeah, I mean that's just
that's
a
what it is.
reality of math, right? The
Okay.
the budget is what the budget is in for these projects. So anything that you do that has you paying more for a particular unit means that you're going to be able to ultimately serve less people because the resources are finite. It's not like you get a bump up from what you get from HUD if you decide you're using a utility allowance schedule that's more generous. I also just wanted to acknowledge the question from Amanda in the chat. So requesting a status update on DMHAS paying I think you mean the utility reimbursement for the grants they administer. And I do not have an update on that. I'm not sure, Lisa, if anyone on your side does. I know it's a big ship over there at DMHAS to steer. So I don't know that we've got any kind of timeline or more information about that.
Yeah, we don't necessarily have a timeline. We are currently actively working on that, and there'll be more to come. We could probably give an update in the next quarterly meeting, but it is being worked on actively right now. So hopefully soon.
Thanks, Lisa.
You're welcome.
And then we've got a question from a different Amanda that says, for PSH utility allowance, how do we proceed when the utility allowance is greater than the utility bill. You don't need to consider ever the amount that's in the bill. So you just need to consider the amount that's in the allowance. So the tenant rent calculation is based upon the amount that's in the allowance, not what's in the bill, whether that amount is lower or higher than the bill. And then if it's possible, I think a separate training on this would be helpful. I'm still confused on how to apply this. Noted, Amanda. Thanks for the suggestion. And Kathleen has her hand up.
But I just want to point out for Amanda that there was a utility allowance webinar for rapid rehousing. It's on the slide, the link to the training that was already done on that, in case I'm not sure, Amanda, if you're a rapid rehousing program or not. Yeah, Kathleen.
Thank you. So I have been using the DOH Section 8 housing voucher utility allowance because New Haven Housing Authority, the most recent thing posted on their website is from 2022.
I think that's fine, Kathleen.
That's all right. All right.
I would just expect, I mean, if you said that to us when we came out and monitored, we'd say, okay, fine. And, you know, the chances that you're going to get monitored by HUD anytime soon are lower.
Reducing by every day.
Cut their staff. Yeah. So I think it's fine. All right, I'm going to keep moving us on because we've got a lot more to cover here. So now we are going to talk about how rent is calculated, and we're going to start by talking about rapid rehousing. So HUD says that for rapid rehousing, COCs have to develop written policies that indicate how much rent a participant has to pay. And so HUD gives COCs broad discretion to determine what the calculation methodology will be to determine how much folks living in rapid rehousing have to pay. And so we have in CT-BOSS worked with you all and with the Department of Housing to create statewide standards that are documented in the Rapid Rehousing Operations Guide. And most projects across the state use the standards that are here. There are slightly different standards for YHDP rapid rehousing. We're not going to go through all of those details today because we have limited time, but those standards are also in the Rapid Rehousing Operations Guide. So in month one, right, the subsidy is basically going to pay 100% regardless of what the income is, right? So the subsidy is going to pay the security deposit, they're going to pay the first month's rent, and as we just discussed, they're going to pay any applicable utility allowance. So the participant is not going to have to pay anything to the landlord. The subsidy covers everything. So in months 2 to 6, the tenants pay 30% of their net income. Shannon covered this. So it's net income, not gross income in rapid rehousing. And the subsidy is going to pay the remainder. And then in month 7 until they exit the program, and obviously in rapid rehousing, we're working to get people income and exited from the program as quickly as we can so that we can get more people help through the rapid rehousing program. But in month 7 to program exit, tenants are going to pay 60% of their net income, and the subsidy is going to pay the remainder. The exception to this is that if you've got somebody who's already been approved for PSH or another kind of permanent housing voucher, right, a RAP voucher, a housing choice or Section 8 voucher, an EHV or a mainstream voucher, and you're just waiting for that transition to happen, then we're going to calculate their portion at 30% of net income. Right. So that's only for people that have already been approved to move on to or bridge, sometimes we say, to a permanent voucher. And then finally, in rapid rehousing, financial assistance will end once the person has reached the 12-month limit. there is the possibility to extend that to 24 months, which is the maximum that's allowable by HUD, but those extensions should be rare. We should be moving almost everyone off of rapid rehousing assistance within the 12 months, and we'll talk about the process for requesting an extension in a minute. And the other way that the financial assistance is going to end is that when the household's net income is equal to or greater than 60% of the gross rent, and again, gross rent is rent plus the utility allowance, then the assistance would also end. So this is new, just in this past January, so just a couple months ago. Some of the rapid rehousing providers asked whether or not it was, we could change the policy so that they could opt to use the rent standards that I just went through rather than the YHDP rent standards for rapid rehousing. And the steering committee did approve that. So as of January, if you are operating a YHDP rental rapid rehousing program, you can choose which of the two methodologies you want to use, but you have to make that decision on a project-wide basis, right? So you can't say, for Joe, I'm going to use the YHDP methodology, and for Shannon, I'm going to use the standard methodology, right? You have to select one methodology and then use that consistently for all of your participants. So if you are going to change from what had been the requirement prior to January to use the YHDP rapid rehousing methodology to the for lack of a better word, I'll call it the adult methodology, you've got to document that in your written policies and procedures with the start date for which the change is effective. And then when we come and monitor, or HUD comes and monitors, they'll look and make sure that you have that documented and the date, and then we'll look at the rent, make sure you're using the correct tool as of that date. All right. So now we are going to talk about how rent is calculated in permanent supportive housing projects. So in PSH, unlike in rapid rehousing, HUD tells us how we must calculate the rent. So we have no discretion as a CoC on this. And I'm not going to go through all of this because, to be honest with you, I've been monitoring CoC programs for probably about a dozen years now. And I have never seen a rent calculation that uses the 10% or the portion of the family's welfare assistance. It always ends up being that what the person is paying is 30% of the family's monthly adjusted income. So that is what we are going to focus on. And the rent tool automatically does these calculations for you. So you do not have to do any math. So that's the good news. You just have to put the right numbers into the spreadsheet, and the spreadsheet will give you the correct answer. The last bullet on this slide, no minimum rents are permitted. This is important. It used to be more of a problem in the past when we had a lot of different, or several different anyway, public housing authorities that were administering our CoC rental assistance. Some of them were charging a minimum rent, right? So they would say, regardless of what your income is, everyone has to pay at least $50 a month in rent. So that is not allowable for the CoC program, even if the PHA does that for their other subsidized housing programs. So they might have a minimum rent in public housing, but they may not apply that minimum rent to any CoC units that they are administering. All right. So it's important for people to understand, the participants that we're working with, it's important for them to understand that, rent isn't arbitrary, right? You just didn't make up a number for how much they have to pay every month, that you are doing those calculations in accordance with the rules that you are required to apply in order to calculate their rent. And so you want to make sure that as you're using that tool, and I know it's complicated, but to try and show the participant, to help them understand as much as possible how you derived that number. That can also help to make sure that you didn't make a mistake, because they are very familiar probably with their own income and their own financial situation. And so involving them as much as possible can help to make sure that you have done everything correctly. And then we also want to make sure that we are telling everyone in writing how much they are responsible to pay every month, so that that is all clear and transparent. And so in the DMHAS PSH workbooks, which Shannon talked about earlier and which are linked on slide number 10, there is a rent obligation notification form, like a letter basically, that is embedded in the workbook, and you want to print out that letter, give it to the tenant, and keep it in the files. You don't necessarily need to keep a printout in the files. Keeping the workbook is fine. So, and then if you are a non-DMHAS PSH project, there's a link here that is outside of the workbook that you can use. And then if you are a rapid rehousing project, the letter that you are required to give to participants telling them how much they owe for their rent, there are two different ones. The first one is for the regular rapid rehousing project, and the second one is for the YHDP rapid rehousing project. All right. So when someone initially leases a unit, this slide describes what you can pay, right? Now, just because HUD allows you to pay this much doesn't necessarily mean that you are going to pay all of these things every time you lease a unit. We obviously want to pay the least amount necessary to secure a unit so that we can help as many people as possible. But HUD does allow you to pay a security deposit of up to 2 months' rent. However, the law in Connecticut is that landlords may only charge participants who are 62 or older 1 month of rent. So for anybody over 62, you would only be paying a security of 1 month. HUD also permits you to pay upfront the first and the last month's rent along with the security deposit, right? So that means that you could theoretically pay 4 months rent. So 2 months security deposit plus first and last, which if needed, particularly when you're working with people who are very hard to house, that can be a nice incentive for landlords. DMHAS does typically only pay 1 month security and first month's rent, right? So if that's not going to work for any particular person, I would reach out to Lisa and her colleagues to see if there's another possibility. But generally, what you should plan to pay if you're a DMHAS PSH project is just 1 month security and first month's rent. All right. So we also need to make sure that we are recertifying people and recalculating income as required. And we're going to talk first about those requirements for PSH. So in permanent supportive housing, you are required to recertify folks annually and to send the participant a notice that they are coming up for recertification about 90 days before the recertification date. Now, 90 days is a long time ahead. I know I don't necessarily remember things for a full 90 days, so you're probably going to also need to remind people as that date approaches. I'm not going to go through all of this, but these are the things outlined on this slide that the operations guy said are required in that 90-day notice. I think the most important thing here is that you're telling people in advance that they are due for recertification and working to try and get all of that information and everything done so that you can recertify in a timely basis. And then you want to maintain a copy of that recertification notice in the client's chart. This slide I think particularly for agencies that are running both PSH or transitional housing and rapid rehousing, hopefully is helpful for your teams to be able to see how the requirements differ across the different component types. So as I just said, in PSH and also in transitional housing, you should be doing recertification at least annually. And in rapid rehousing, you are required to recertify at least every 90 months. In addition, as Shannon said earlier, when people's income changes, for PSH, regardless of whether or not that's an increase or a decrease of $40 or more, you should be recertifying and recalculating rent. You may also, if it's helpful for the tenant, if a smaller than $40 decrease is going to make a meaningful difference for them, you can also recalculate. For less than a $40 decrease, you have discretion to do that if it's helpful. For rapid rehousing, you must, in addition to recertifying at least every 90 days, you've also got to recertify if the person's net income decreases by $40 or more. You do not have to recertify in rapid rehousing for an increase in income. That increase would be picked up at the next 90-day recertification. And again, if somebody's income goes down and the rent reduction would be meaningful to them, by all means, feel free to recalculate for decreases that are in amount that is less than $40. And then also linked on this slide, I won't go through it all, but are all of the different forms that DOH requires at each 90-day review, as well as the exception form that is required if you are seeking to assist somebody for more than 12 months. All right. So when you are doing an annual recertification, you also want to make sure that you are, for example, re-inspecting the unit for housing quality standards and redetermining that rent is reasonable. So you've got to do these things every year, regardless of whether or not the person is staying in the same unit on a month-to-month lease, right? So doing HQS and rent reasonableness is required at least annually, regardless of whether or not you're executing a new lease, all right? If someone is moving to a new unit, you want to make sure that your environmental, for your environmental review, we talked about this in the first session, there's a list of all the units that you are leasing that is attached to that form. So you want to make sure that you are keeping that list current. And if you are in a coastal county, you want to make sure that you are obtaining the maps for that unit. And if you don't know what that means, go back and watch the video from session number 1 where we cover that content. And then you also want to do the income determination, document income and redo the rent calculation at that recertification. And then, if you're probably going to be executing a new lease and then executing a new HAP contract. And you want to make sure that you are doing your HMIS annual assessment. So failure to do the annual assessment is going to both impact the data that you report to HUD in your annual progress report, and it's also going to make it look like your outcomes are worse than they actually are on your renewal evaluation for CT-BOSS. So please be sure that you are doing those annual assessments on time for all of your clients. And then there are going to be other kind of payment processing and other forms, and we're not going to go through all of that, but they are all detailed in the operations guides for both PSH and rapid rehousing.
There's a note in the chat just that someone says annual assessments are due, the reminder, right, from the date of intake, not the date of move-ins, which often those two don't match. So remember that.
Thank you, Mandy.
And the annual assessments, I'll just say, they also impact system performance measures, which is something that we as a COC have to report to HUD every year. So
Thank you, Shannon. And it determines how much money we get for new projects. So thank you for mentioning it, Shannon. Zoom poll?
Zoom poll. Poll number 2. Okay.
All right. So first question, what determines the utility allowance amount I should enter into the rent calculation tool? Second question, how often must HQS and rent reasonableness determinations be completed? We'll give you a couple minutes to answer this poll.
Another person put it in the chat while you were talking. One of the previous slides, 1 month security is also an issue right now. Okay, I think over 60%.
Yep, you can end it. We'll share.
Go ahead.
All right, so the first question, what determines the utility allowance amount I should enter into the rent calculation tool? So only one of these things is correct. So it's the amount shown on the DOH or Public Housing Authority utility allowance schedule, right? So the utility allowance is not determined at all by a bill, nor is it determined by any arrears that the person owes. So it is only determined by the applicable utility allowance schedule. And then to the second question, how often must HQS and rent reasonableness determinations be completed? And the correct answer to that is at least annually. And again, make sure you do those things. Even if you're moving someone to a month-to-month lease, you still have to do the HQS again, and you still have to do the rent reasonableness determination again. All right. Housing stabilization services. So let me just stop sharing here. So, I think sometimes people get confused and they think that this is a housing first program, right? There are no rules. People can do whatever they want and there are no rules. And that just is not the case, right? So tenants in a housing first program have got to follow their obligations in their lease. They've got to pay their rent. They've got to, dispose of their trash as required in the lease. They can't disrupt their neighbors, right? All of the same lease rules apply in a housing first program as apply in any other kind of housing. And enforcement of those lease provisions is super important, right? So when there's a lease violation, you really want the landlord to issue a written violation notice. That helps to ensure that the tenant understands that whatever the violation is, that is not acceptable, right? And it gives you as the service provider the opportunity to engage the person in a conversation about what the potential consequences are if the violation continues, and also how you can help them to correct the violation, right? So if they're not paying the rent on time, which is often the case, maybe you're going to schedule your case management meeting on rent payment day every month to make sure that you're helping them to get that check and make the payment, right? You don't want the landlord to wait until the problem has continued for months before they issue the violation. You want to be able to promptly use that violation notice as a tool to help the tenant to understand what their obligations are, and again, what might happen if they continue to not meet those obligations. That said, as the your teams are not responsible for lease enforcement, right? It's the landlord, the owner's responsibility to enforce the lease. There may be folks on the webinar today where you're running congregate permanent supportive housing and your agency actually owns the building, and so your agency is the landlord. If that's the case, the CT BOSS Housing First principles require that there be a separation of duties, right? So the case manager should be responsible for helping, and someone else at the agency should be responsible for lease enforcement. So you, as the service provider, are not responsible for lease enforcement. That's the landlord's job, but you are responsible for helping people to understand what their obligations are under the lease. You're responsible for helping them to connect to whatever services they might need in order to reduce the risks, address whatever barriers they have going on, and reduce the risks that they're going to get evicted. And again, you want to also be coordinating with the owner to really encourage the owner to be doing proactive lease enforcement. You're not doing the tenant any favor by not enforcing the lease. So, and then you are also wanting to meet with participants in their apartments. So, you don't want to wait until 12 months have gone by and you're going to do an HQS inspection to find that like the apartment is in such a state, right, that it's never going to pass. So you want to get into that apartment, get eyes on that apartment really as often as you can. For PSH, you are required to meet with the person in their apartment within the first 30 days of their tenancy and at least every 6 months thereafter. And you are required at that approximately that 6-month mark. So you're going to do HQS right at the beginning. And then about 6 months later, you're going to do this health and safety checklist again to make sure that you're in the unit and putting eyes on the unit. And that is a requirement. So if you've got tenants who are refusing admission to the unit, you can say, hey, look, I have to do this health and safety checklist. It's a requirement of our funder. So it gives you a little bit of an entree point with someone that otherwise might not be allowing you into the unit. And I see Elaine has her hand up.
So over the last, I want to say 24 months, maybe even let's go back to the beginning of COVID. There have been a lot of landlords, hedge funds, however you want to phrase it, that have bought up a lot of property. They understand the process, whether it's through a permanent supportive housing program or a PHA or, Department of Housing. They do understand the process. What I'm seeing, and maybe others are seeing as well, is that we are not being notified that a client is not paying their portion of the rent until the client gets either a notice to quit or a sheriff shows up at the door, because the client isn't aware enough, even meeting with a case manager, to let them know. They're fearful. So at this point in the PSH process, those we serve and those coming through our respective cans are the neediest of the needy.
Yeah, they're very ill.
And their thought process is sometimes not clear.
Yeah. So I think,
It's such a hard, and it's now it's court time. It's, it's landlords. You're calling and trying to speak with somebody, but their layers are so thick that, sometimes you're speaking with a young kid. This is their first job, behind the desk at a property management company that is brutal. But with those we serve, sometimes we have to house them where we can.
Yeah.
So it's a tough situation all around. I think for all of us involved in this type of situation.
Yeah. Thanks for that, Elaine. Yeah, it's, I don't have to tell you guys, it's a rough housing market, and the dynamic that you're describing exists not just in Connecticut, but all around the country. And I think, that you're going to do all the things that I'm sure your team is already doing, Elaine, right? To try and make sure that the tenant is actually paying their rent, whether that's, again, making sure that you're scheduling a case management meeting where you're actually going to be participating in that rent payment once a month, right? So that you're sure that the rent payment happened, whether it's, being able to look at the, and if the people have some sort of banking account where you can see that the rent payment was deducted from the account, but putting in those extra measures, because you are not going to necessarily be able to rely on these huge corporate landlords to be good partners in this. It's an important dynamic. I'm going to move us on. We've got like 20 some more slides, and we've only got 30 minutes left. So I think what I'm going to do is I'm going to run through the slides, and we're going to hold questions for the end. And if we don't get to all the questions, we'll stay on for a little bit to keep asking questions, but we want to make sure, particularly for people that might be new to all of this, that we get through all of the content. So, okay. So obviously your goal is always to help people stay stably housed. And so in order to do that, right, we're going to leverage all of the available resources, our, great case managers that are out there trying to help everybody, our partners at the CAN, substance use services, mental health services, employment services, all of the mainstream resources to try and help people get stable and stay stable in their housing. Sometimes, despite all of your best efforts, right, as the situation that Elaine was just describing, that's not going to work, and the person is going to come at risk for an eviction. And so when that happens, the CT-BOSS policies require that as soon as you know that someone's at risk of eviction, that you notify the CAN. The idea is that the CAN will then convene a case conference to talk about, is there anything else that we collectively can do to help support this person and to help prevent them from returning to homelessness. Sometimes it may, even with all of the coordination and cooperation of your partners in the CAN, you're not going to be able to save the housing placement, and people are going to get evicted. And we'll talk in a minute about those evictions. Sometimes you're also going to have to terminate their assistance from the CoC program. If you are terminating people's assistance from the CoC program, folks have the right to appeal, and making sure that you're following all of the procedures that we're going to go through now, and documenting everything, right? What were the issues? What were the interventions that you tried? Did you send the warning letter that we're going to talk about in a minute? That's going to make it less likely that the termination is overturned on appeal, right? So following all of this stuff is the right thing to do, obviously, and I'm sure you're doing it because it helps to protect the tenant's rights, and it also makes it less likely that the termination is going to be reversed on appeal. So, eviction. So again, sometimes, despite all your best efforts, right, someone's going to get evicted, and you're not going to be able to stop it. And a couple things to keep in mind. This is lease-based housing. The owners, the landlords, are obligated to evict only through court action, right? No illegal evictions. You can't just tell someone they have to leave and then they have to leave. If you find that you've got landlords who are attempting to evict people outside of the court process, then you want to make sure you are connecting that person with legal services to and also educate. It might just be you have to educate the landlord. Sometimes mom and pop, smaller landlords don't know the rules. So you may have to just do some education of the landlord. So, and then again, we talked about this already. You don't want the eviction to be a surprise, although sometimes, as Elaine is pointing out, it might be a surprise despite all of your best efforts. But you really want to try to have regular communication with your landlord so that you can assess what the eviction risks are and help to mediate those risks in advance of it getting to the point where they're actually moving to evict. When all of your best efforts have not succeeded, and it is gonna, the landlord is gonna move to formally evict. You don't want that to happen, right? Having an eviction on the record for the tenant makes any future rehousing efforts harder, and it's also a lot of money. It's expensive for landlords to go through the court process and to evict. So generally speaking, the better outcome is going to be to negotiate a mutually agreed upon termination of the lease so that the landlord doesn't have to go through the legal eviction process and incur that expense, and the tenant does not have what may be for them, another eviction in their history. So the other really important thing to keep in mind is that we don't give up on people, right? So no matter how many times we've tried to help someone and for, whatever reason, they've not been able to retain the unit, we are going to keep trying to help them. So just because someone gets evicted from a unit, that does not automatically mean that they are terminated from the CoC program, right? So particularly if you are operating scattered site housing, if someone gets evicted, you should keep them enrolled and continue to try to rehouse them whenever possible. If you exit them from the project, that is often, particularly in PSH, where people are going to need to meet the dedicated plus criteria in order to be re-enrolled, that is often going to impact their eligibility for future CoC assistance, at least for a while. So again, always try, to rehouse people whenever possible. If, again, all efforts have been exhausted and not only are they evicted, but you also need to terminate, having that termination doesn't impact the person's ability to apply again later or then. And, if they return to homelessness, they can go back through the CAN process. But they're going to have to recertify, you're going to have to recertify their eligibility, and they're going to get back in line, right, in terms of prioritization on the by name list. So rehousing is definitely the better option most times. Before you commence any kind of process to terminate someone's assistance from the CoC program, you have got to notify them in writing. So this is the requirement we're going to talk about now for PSH, and we'll do rapid rehousing next. So that warning letter should say what the problem is, right? What rule they're violating that's going to result in their termination, who they should contact and what they need to do to correct the problem. You're going to send that by mail. You're going to make sure the case manager is copied, and you're going to maintain that in a chart. I think this is a reason commonly why terminations get overturned on appeal, because you didn't do the warning letter that is required. So make sure that you do that letter. In rapid rehousing, and actually before I move on to this, I just want to say, obviously you're going to have many conversations before you get to the point of doing a warning letter. So the warning letter comes after you've had those conversations to try and help the person to understand what the problem is and how they correct it. In rapid rehousing, there's a slightly different process. So prior to discontinuing someone's financial assistance, you're going to engage the person in what is called a reset discussion, right? To go over, what the expectations are of the program, to go over the housing stability plan, maybe make some revisions to the housing stability plan, and establish some next steps that are going to allow the person to keep getting the assistance. And you're going to then document what was discussed in a letter to the participant that says, you know, here's what we met. Here's what we met on this day. We talked about these things. You agreed to do these things. I agreed to do these things. And you're going to want to make sure that that letter is in the file. And again, if somebody grieves a termination and you haven't done that, the likelihood is that that termination is going to get overturned through the grievance process. So now we're going to talk about what happens when you actually are terminating someone's assistance. So hopefully in a lot of cases, right, you're ending somebody's assistance for a positive reason, right? They got a job, they've got a new apartment, they got married, they're moving in with their spouse. Hopefully you're seeing lots of positive exits. But regardless of why you're terminating someone, whether it's because, you know, they got evicted and you exhausted all efforts to try to rehouse them, or whether it's because they, you know, got married and are moving to a great new apartment with their beloved, you're going to do these things, right? So you're going to send them a written notice, and that notice can be very congratulatory. Congratulations. You now have a Section 8 voucher and you no longer need assistance from the CoC program. Therefore, we are discontinuing your assistance, right? It can have a congratulatory tone to it. It can also say, you know, you didn't follow these rules and therefore we are having to terminate your assistance. So in any case, with the only exception being someone has died, you're always going to do a written notice when you are terminating someone from the CoC program. And if the reason for termination is because of a rules violation, you're going to provide a copy of the written rule that they violated. You're always going to notify them of the opportunity to appeal the decision, even if you think it's a positive exit, right? Someone may say, hey, wait a minute, that's not true. I didn't get approved for Section 8. I still need this help, right? So you're always going to give them the opportunity to appeal. And you're going to say in the letter that they have the right to receive a written notification if they do appeal of what the final decision is. You're also going to make sure that every time you do a notice of termination, you're advising people of their VAWA rights. So you have to give them the VAWA notification of occupancy rights and the incident certification form. And those two forms are linked here. And then this is a question we get often with monitoring. A lot of times, if it's not a positive exit, you don't know where the person is, right? So if you know where the person is, if you know that they've gone to a shelter, send the letter to the shelter. If you don't know where the person is, you can send it to an emergency contact if you have an address for an emergency contact, or just send it to their last known address. So send it to the apartment that they got evicted from. If they had their mail forwarded, which I think probably most of our folks don't because they're often in crisis at the time that this happens, it'll get forwarded, but you'll have done your due diligence. So, and you want to keep that copy of that written notice that you sent. If it gets returned to you, keep the return to sender mail in the file. All right. So this is a list of all of the additional requirements that apply and the forms for doing all of these things when you are terminating someone from a PSH project. So the first thing is for all PSH, it's the warning letter, and then the second 4 links on this slide apply only to DMHAS PSH. And you definitely want to make sure that if somebody is no longer getting assistance from the program, that you make sure that you stop the payment so that the landlord doesn't continue to get paid through a change order for a DMHAS program. And your agency will have a similar process for what you should do if your agency is directly paying the rent rather than DMHAS paying the rent. All right. These are the forms that are required when you are terminating someone from rapid rehousing. Again, I'm not going to go through them all. You can see them documented here. And and we're going to talk about security deposit refunds. So, we want to make sure that if the landlord should be returning money from the security deposit, that we are taking steps to ensure that the landlord has done that, right? In a rapid rehousing program, that money is going to go back to the participant, and our participants can really use that money. In the PSH program, the money is going to go back into the program, and our programs can really use that money to help someone else rent a unit. So we don't want to let landlords keep money that they are not entitled to keep. So in order to make sure that that the landlord is holding any money due to damages legitimately, we want to make sure that we document the condition of the unit at move-in, right? So if there was damage in the unit before the person moved in, make sure you document that, for example, through photos, and that you keep those photos in the chart. And then you want to also document at exit to assess any damage that may have been caused by the participant. So we know that exit inspections are not always possible, right? You may sometimes not even know that someone has abandoned a unit until it's too late for you to be able to get access back into that unit to do the exit inspection. But hopefully, in most cases, you're aware and you can do the exit inspection to protect against the landlord not returning a security deposit when they should. The rules around security deposits are laid out in the link at the bottom of this slide. So if you have questions about what landlords can and can't do, check out that link. Obviously, they can withhold a refund of a security deposit if the tenant owes them rent. And they can also withhold for any damages that were caused by the tenant. Now, damages that are, the apartment above them had a pipe burst and there's water damage, right? That's not caused by the tenant, and so they should not be withholding rent in that case. So you want to make sure that when someone is exiting a unit, that you have notified the property owner of that, you expect the refund to be paid. They also have to pay interest on that money that they have been holding. And you should provide them with the information about how they are to return that refund. So for DMHAS projects, they return that refund to DMHAS, and the details about exactly to whom it gets sent are in the operating guide. And for rapid rehousing projects, as I said, that refund should be returned to the participant, and will hopefully help them have a little bit of extra money in their pocket. So a little bit about vacancies. So most of your projects are using rental assistance. All of the CoC rapid rehousing projects are using the rental assistance budget line item. Almost all of our PSH projects, with a few exceptions, are using the rental assistance budget line item. So assuming that your project is using rental assistance, you may continue to pay that rental assistance for a maximum of 30 days from the end of the month in which the unit is vacated, unless you are renting that unit again, obviously, for another eligible participant. You may also continue to pay that rent when someone goes to an institution, so like a hospital or jail or a nursing home, for less than 90 days. And if the person who qualified the household for the assistance dies or has been institutionalized for more than 90 days, you can continue that assistance for the remaining household members until the lease expires. The rules are different if you are using leasing income. If you've got questions about that, just give us a call. All right, so there is also a provision, and again, this is only an eligible expense for rental assistance projects, not for leasing projects. HUD does allow you to use CoC rental assistance in an amount not to exceed 1 month's rent to pay for damages caused by the participant. So again, in this picture, if the participant punches a hole in the wall, that is an eligible potential property damage expense, but the leaky pipe from the neighbor's unit above is not. So there are a couple limitations that are kind of unfortunate, but these are HUD rules. We don't have any discretion. You can only do this one time per participant, and you can only do it at the time that they're exiting from the housing unit. So it's not a thing that you can use to convince a landlord to keep someone in a unit, but it is a thing that you could use to convince a landlord to stay involved in the program and to allow you to rent another unit again for a different participant. All right, so I think we are going to, I'm just going to skip to the answers on this Zoom poll because we've got more content to cover. So we'll just do the Zoom poll together. So the first question, and we're picking what's the accurate statement. It's the landlord's job to enforce the lease, and that statement is correct. It's the CoC project staff's job to help participants to comply with the lease, also correct. So not the staff's job to enforce the lease. And eviction or loss of a unit results automatically in termination from the CoC project in scattered site housing, and that is incorrect. You can, and in fact you should, continue to serve people even after they've been evicted. You should help them to hopefully rent a new place. And then the second question, in which of these scenarios is a written termination notice required? And here you get to select more than one. And a written termination is required in all of these circumstances, right? So you've got to give them a written notice when you're terminating case management services for someone that doesn't get a housing subsidy. So like if you're a supportive services only project, for example, you've got to do a written notice when you're exiting someone who has been hospitalized for more than 90 days. You've got to do a written notice when you're exiting someone who just disappeared. They walked away from the unit and you have no idea where they are. You're going to send that to the last known address or to an emergency contact. Maybe you can find out through your CAN where the person is. And you are also going to send a written termination notice when someone has moved on to a Section 8 unit, even though that is generally going to be a positive exit. All right. So this slide here is just some reminders that I think we covered in session number 1. So all of this is a lot. We know that this is a lot. But we have everything is also explained in the operations guide. And there are these resources on the CTBOSS resources page so that especially if you're new, you're sure, or really for all of us, that we're sure that we're collecting all of the documents that we need to collect. So all of the required forms, as well as checklists for both the PSH and the Rapid Rehousing Project. So what forms are required in participants' charts are available on the CTBOSS resource page. And then if you are not a DMHAS PSH project, or you are not a rapid rehousing project, there's also a checklist that shows you what forms are required in which project types on the resource page. So if you're not familiar with those, check them out. And I think we are going to invite folks that would like to hop off now because you are not a DMHAS PSH project to do so. So if you are a PSH project and DMHAS is the recipient of the grant, meaning DMHAS is the one that actually pays the landlords the rent, then you might want to hop off now because the next few slides that we're going to do are only applicable to DMHAS PSH programs. We appreciate you. Thank you for joining us. You're also welcome to stick around because we will stick around at the end to answer any questions that we didn't get to. So if you're hopping off, goodbye and have a wonderful day. And if you're staying on, just bear with us for a few minutes here while we get through these last set of slides. So a couple of things that we didn't talk about already that only really apply to DMHAS PSH. So when you are newly admitting someone into the program, you're also going to provide them with the rental assistance housing certificate, and that's the document that tells them, basically, that they've been approved, that they should look for a unit, and what bedroom size and how much the FMR is for that unit. So initially, the initial approval is for 60 days from the date of certification. So you should be trying to help folks to locate a unit within 60 days. Obviously, it's a very rough housing market. And it might take longer than that. And if you need longer than that, you can ask for, you may issue an extension for up to an additional 60 days. And then if you need an extension beyond that, you should work with Alice and Lisa and Kim and the folks at the DMHAS Housing and Homelessness Services units to get approval for an extension that is beyond that second 60-day period. And then you're also going to provide people with this Federal Privacy Act notice that's linked here. And if you are a DMHAS project, you must use the DMHAS standard lease, right? So you cannot execute another lease. That the landlord has to agree to use the DMHAS standard lease. And you also have to do the request for lease approval, the owner assurance. The RFLA is, basically says, who pays for which utilities. So that's important, and has a whole bunch of other information on it that DMHAS needs to be able to process the payment. And then the owner assurance is really attesting that the owner still owns the building and that all the forms that they originally submitted at the initial leasing are still in effect. And then the HAP contract agreement, right? So whenever you're signing a new lease, you also need to do a HAP contract, as well as an amendment, right? If you are extending a lease, right, then you also need to extend the HAP contract. And so there's a HAP contract amendment form. The occupancy continuation form collects things like who's going to live in the unit and how much their income and assets are. So that is also required, as well as the recertification payment letter, which really notifies the tenant that they have been recertified and what their new rent and their portion of the rent are. And several of these documents are embedded in the workbook. And so, as Shannon explained earlier, if you enter information in one place, it should populate in other places and make it easier for you to do all of these forms. All right, these are the very important, right? We want to make sure that DMHAS has everything they need to get the landlord paid promptly. And so these are the forms that are required. In order to do that, you need the W-9, you need the state of Connecticut vendor form. There may be some additional forms that are necessary under certain circumstances, so be sure you are reading the operations guide. Please make sure all of the information entered on the forms is legible. If it's not legible, DMHAS might kick it back, and then that is going to delay being able to get that unit leased and someone housed, or at least get the rent payments going to the landlord. And a couple more things here. Again, we want to make sure people get paid. They made a change. This is a couple years ago now, so this shouldn't be new to anyone, but to where the W-9 and the agency vendor form gets sent. So that information is here. And then finally, change orders, right? So anytime that you're going to change a HAP agreement, right? You've got to do a change order. And any time that you want to get a landlord to get paid after a HAP has expired, or to stop payments, as we talked about earlier, you've got to make sure you do a change order. And just make sure all of the details that are included here are clear on the form, so that there are no delays and nothing slows us down. I'm not going to go through all of this. So I am going to, though, say sorry that we had to hold questions. We don't usually like to do that, but we had a lot of content to get through. So I'm going to open it back up to any questions that we did not get to. And then also, just in case people need to hop off, I just want to show that this is our contact information, and our team is always available to answer your questions. So please contact us at any time with those questions. Want to thank anybody that is hopping off for joining us today. And Shannon, you can stop the recording.